What's going on, everybody? Travis Witherspoon from Carter Cow Trading, helping you fight for your financial freedom throughout the Forex market. This is a new week, so we have a new trade of the week. The trade that we're going to end up taking a look at is the gold versus United States dollar. Now, this is going to end up kind of piggybacking on what we ended up talking about last week, where we end up saying that we're looking at US yen and being able to look at the US Swiss franc as overall pairs of being able to get into. What we're going to end up seeing is being able to take a look at what happened with gold. Now, gold at a point right now on the weekly chart has a up move that should be able to get hit at 1920. But currently right now, if you notice, we can see that the weekly and the daily are basically in the sell zone, or at least at a point to where they was in the sell zone, and then after that broke a counter trend line, which is this purple trend line right here. So if we take a look at the overall daily, we can see that we end up having that movement where we end up breaking the trend line. We retested this overall zone, and then after that on Friday, on Thursday, really had that sharp move to the downside where basically ended up hitting 1876 as a overall spot, and then after that started to bounce back up. But what does this actually mean? We're looking at this from a long-term perspective. We're saying from a weekly perspective, that means that the market is going to end up falling down for at least 4 to right around 8 weeks. Then that means that we still have a lot of room to be able to fall down on the downside for this overall movement. I expect that the market will end up having a healthy drop from having an inner trend line break to the outer trend line break, meaning that if we look at this overall pair and look at where this market could potentially fall down to, at least for just a short movement to the downside, not necessarily a long-term movement, we can expect that this market could fall down to this area right around 819 or 1,819 for its overall position. Now, how can we be able to get into this position? Let's take a look at the 2 hour. Let's see what's happening for this overall move. Currently, right now, what we end up seeing is that we end up having our first Fibonacci swing be completed. So if we go to this overall field right here, where we had a high point, we end up having a, let's see, let's go with an A, B, C, D movement. Take myself right here, move myself out the way. We go A to B to C, had a D extension they end up hitting right now. Now we're on the second phase of that overall move. Now, if we go back to what we ended up talking about before, what did this market end up having this B at? Right around 1896. Well, where are we at right now? Right around 1890. So going into this upcoming week, we will have an opportunity of being able to take a look at this for the actual pair to be able to sell on once the market ends up getting to this high point and breaks a counter trend line break. If it breaks a counter trend line break, where's the market going to fall down to? It's expected to fall down to right around 1840-ish when it comes down to a range. I can give you a clear number once I see it, 1837 as the second position. And then after that, we look at where the market could fall down to from an overall long-term perspective. Once again, we're talking about 1818 for the overall spot. So I believe that going into this overall week where the United States dollar has started to be able to have a little bit of a transition and being strong, and then after that had a bad jobs report that actually ended up making it a little bit negative. I think that kind of set up for a breakout and a retest type of area where we can see if the United States dollar is going to end up having continued strength going into the next few weeks and being able to have some movement from there. So once again, what would I look for when it comes down to this pair? We have time frame alignment, we have momentum. Now we're looking for our overall counter trend line break to be able to get in. Once that happens, then you have an opportunity of being able to get in by being able to place your stop just above the overall swing high. Anything above 1910 is okay with an overall stop loss level. Anything going down to 1837 to 1818 will end up being a slight position that I will look at for being able to get out. If you like what we end up doing, please make sure that you like, share, and subscribe to the Carter Cow Capital social media pages. That is Trade with Travis on YouTube. That is Carter Cow Trading on Instagram. And that is Carter Cow Trading on Facebook. And obviously, you can be able to drop in a like on my regular Facebook page, Travis Witherspoon. Like always, make sure that you end up planning your trade, trading your plan. Everyone, y'all have a good one.